Hello everyone and welcome back to our channel. Today, we're diving deep into a topic of major diplomatic and economic significance. The recent visit of UAE President Sheikh Mohamed bin Zayed Al Nahyan to Pakistan. This wasn't just a handshake and a photo op. The UAE is one of Pakistan's most crucial strategic partners, a major investor, and a key source of remittances. High-level visits like this often signal a new chapter in economic cooperation and long-term partnership. But while the headlines are buzzing with optimism, it's our job to look beyond the surface. What does this visit truly mean for Pakistan's fragile economy? We'll be breaking down the potential positive impacts, the opportunities that could transform the nation's future, but also the very real challenges and concerns that need to be addressed. Is this a game changer or just a temporary fix? Let's get into the detailed analysis. First, let's talk about the positives, and there are quite a few. The most immediate impact is a massive boost to investor confidence. When a leader of a global economic powerhouse like the UAE personally visits, it sends a powerful message to the world. It says, "We believe in this country's potential." This endorsement significantly enhances Pakistan's credibility, especially in Gulf and international markets, making it a more attractive destination for investment at a time when it needs it most. This directly leads to the second major benefit, a potential surge in foreign direct investment, or FDI. Discussions during these visits aren't just polite chat. They focus on concrete sectors like energy, infrastructure, ports, agriculture, and renewable technology. The UAE has deep pockets and a keen interest in these areas. For Pakistan, this means a chance to secure the capital needed to revive stalled projects, build new ones, and create thousands of jobs. Imagine new power plants, modernized ports, and thriving agricultural projects, all fueled by this renewed partnership. Another critical area is support for Pakistan's balance of payments. The country has been struggling with dwindling foreign exchange reserves, putting immense pressure on the Pakistani rupee. Financial support from the UAE, whether through direct investments, deposits in the state bank, or deferred oil payment facilities, provides immediate breathing room. This helps stabilize the currency, manage import bills, and improve short-term liquidity, essentially acting as a financial lifeline when it's most needed. Beyond direct financial aid, the visit aims to expand trade relations. We could see new bilateral agreements that make it easier for Pakistani goods like rice, textiles, and food products to enter the lucrative Gulf markets. And let's not forget, the UAE is a global trade hub. This means Pakistani products can be re-exported from the UAE to the rest of the world, opening up a whole new world of opportunities for Pakistani businesses. Then there's the human element, remittances. Millions of Pakistanis work in the UAE, and the money they send home is a fundamental pillar of Pakistan's economy. Strong, friendly relations between the two governments help ensure job security for these overseas workers and the stable flow of these vital remittances. This visit reaffirms that bond, providing peace of mind to countless families who depend on this income. Energy cooperation is another huge win. Pakistan faces chronic energy shortages and high import costs. UAE investment in oil storage facilities, refineries, and especially in renewable energy projects like solar and wind farms could be transformative. This would not only reduce Pakistan's reliance on expensive imported fuel, but also help it transition towards a greener, more sustainable energy future, improving overall energy security. Finally, we have large-scale infrastructure and development. There's a lot of talk about potential collaboration on major projects, like upgrading the ports at Gwadar and Karachi, building modern road and logistics networks, and even developing smart cities. These aren't just vanity projects. They are long-term investments that generate employment, stimulate economic activity, and lay the foundation for sustainable growth for decades to come. Now, after painting a very optimistic picture, it's crucial to put on our critical thinking hats and look at the other side of the coin. What are the potential downsides, risks, and concerns? The first major concern is the risk of over-reliance on external support. While bailouts and friendly deposits provide short-term relief, they can create a cycle of dependency. If the government sees these packages as an easy way out, it might delay making the tough, necessary, but often unpopular structural reforms that the economy truly needs. It's like taking a painkiller for a broken bone. It masks the pain, but it doesn't fix the underlying problem. Next, we have to manage public expectations. People struggling with high inflation and unemployment want to see immediate relief. However, most of the agreements signed during these visits are for long-term projects that take years to materialize. The immediate impact on the price of bread or the availability of jobs is often minimal. This can lead to public disillusionment if expectations are raised too high too fast. Then there's the issue of implementation risk. History has shown us that many promising memorandums of understanding, or MOUs, never turn into actual projects on the ground. Bureaucratic hurdles, red tape, and policy inconsistency can scare away even the most patient investors. Without serious reforms to improve the ease of doing business, there's a real danger that billions of dollars in promised investments might never actually arrive. A more sensitive topic is the concern over strategic assets. When foreign entities invest heavily in critical infrastructure like ports, airports, or large tracts of agricultural land, it naturally raises questions about national sovereignty and control. It is absolutely vital that any agreements made are transparent, protect Pakistan's national interests, and have strong safeguards in place to ensure the country doesn't lose control over its key assets. We also have to ask, who really benefits from these investments? Often, the economic gains from large-scale FDI are concentrated in major urban centers and benefit large, established business groups. There's a risk that rural areas, small-scale industries, and the average person might see very little direct benefit, leading to greater economic inequality. The challenge is to ensure that the fruits of this cooperation are shared more broadly across society. Political and policy uncertainty in Pakistan is another major hurdle. Frequent changes in government and abrupt shifts in economic policy make investors nervous. The UAE, like any smart investor, will be watching closely. They may remain cautious and hold back on deploying large amounts of capital until they are confident that there is long-term political stability and policy continuity. Finally, not all support is a gift. Some of it comes in the form of loans or deposits that have to be paid back with interest. This can add to Pakistan's already substantial national debt. If the country fails to use this investment to boost its exports and achieve sustainable growth, it could find itself in an even deeper debt trap down the line, struggling to meet its repayment obligations. So, what's the overall economic assessment? In the short term, the visit is undoubtedly positive. It improves market sentiment, boosts the stock market, and temporarily stabilizes foreign reserves. However, it does very little to address the immediate daily economic hardships faced by ordinary people, like high inflation. In the medium to long term, the impact is entirely conditional. There is massive potential for growth, job creation, and modernization if Pakistan gets its act together. But there is an equally high risk of missed opportunities and growing dependency if deep-rooted governance issues are not resolved. This brings us to the key recommendations for Pakistan. To turn this diplomatic success into a true economic victory, the country must focus on several key areas. First, ensure policy continuity. Investors need a clear and stable roadmap. Second, drastically improve the ease of doing business by cutting red tape and fighting corruption. Third, the focus must shift from seeking aid to boosting exports. Use these partnerships to create products and services the world wants to buy. Fourth, there must be complete transparency in all agreements to build public trust and protect national interests. And finally, investment must be channeled into productive sectors that create jobs and strengthen local industries, not just into speculative real estate. In conclusion, the visit of UAE President Sheikh Mohamed bin Zayed is a significant and welcome development for Pakistan. It offers a golden opportunity to enhance confidence, attract vital investment, and secure short-term economic stability. However, this goodwill is not a blank check. The true challenge for Pakistan lies in using this momentum as a catalyst for genuine, difficult internal reforms. The goal should not be to simply secure the next financial relief package, but to build a self-sufficient, resilient, and sustainable economy. The visit has opened a door. It is now up to Pakistan to walk through it and build a brighter future. Thanks for watching. If you found this analysis helpful, please hit the like button, subscribe to our channel, and ring the bell so you don't miss our future deep dives. We'd love to hear your thoughts in the comments below. See you next time.
Thanks for watching. Like, comments and share.